Hey everyone, and welcome back to the NOSR Webs podcast. Today, we're going deep into Bitcoin.
Deep.
You know what I mean? Like what makes its price go up and down so much?
Yeah, it's a good one to cover for sure.
We've got a ton of info on this, so this is going to be the cheat sheet on Bitcoin price.
That's right.
Well, don't forget to check out the offers we've got linked below.
Yeah, you don't want to miss those.
All right, so Bitcoin price, it's like trying to predict the weather out there.
Absolutely. And you've probably heard of supply and demand.
Yeah, like the more something there is, the cheaper it is, and vice versa.
Exactly. And Bitcoin, it takes that to another level.
Oh, really? How so?
Well, Bitcoin is designed to only ever have 21 million coins.
Oh, wow. I did not know that.
Yeah, and get this, as of today, February 2025, we've already mined like 19 million.
So there's not a lot left then?
Nope. Not a lot of wiggle room for those remaining coins.
And so that alone, like, makes the price go up, right? Because there's less of it?
Right, but then it gets even more interesting.
Oh, really?
Yeah, there are these things called halving events.
Halving events. What are those?
So every 4 years, the reward for mining new blocks of Bitcoin gets cut in half.
So less Bitcoin is created each time.
Exactly.
Okay, but what does that do to the price?
Historically speaking, these halving events, they kind of act like rocket fuel for Bitcoin's price.
Really?
Yeah, take the 2016 halving, for example.
Okay.
Before that halving, Bitcoin was trading at around $450.
Okay.
After that, it went on this massive rally all the way to almost $20,000 by the end of 2017.
Wow. So the price went up a lot then.
Yeah, it did. And it's all because of that scarcity. When something's harder to get, the value goes up.
Makes sense. So less Bitcoin being mined equals higher price.
Basically, but we're just scratching the surface here.
Okay, so what else is there?
Well, it's not just about numbers and halving events. There's this whole other side to Bitcoin's price.
Oh, really? Like what?
It's this thing called market sentiment.
Market sentiment. Okay, so like what people are thinking and feeling about Bitcoin.
Think of it this way. Good news. Everyone's happy, price goes up. Bad news. Everyone panics, price goes down.
Oh, wow. So it's like Bitcoin is controlled by emotions?
Kinda. It's wild, right? Like even a single tweet can shift market sentiment and cause a big price swing.
So it's like a roller coaster ride then up and down all the time.
Exactly.
So how do we even measure this market sentiment thing? Is there like a Bitcoin mood ring or something?
Actually, there is. It's called the Fear and Greed Index.
The Fear and Greed Index? Seriously?
Yeah, no joke. This index, it tracks how the market's feeling about Bitcoin from super scared to super greedy.
So if everyone's feeling greedy, the price is high, and if they're scared, the price drops.
That's the general idea, although it's not perfect. But looking back, it does seem like the Fear and Greed Index is kind of connected to price movements.
Okay. So that's something to watch out for then.
Definitely. So we've got limited supply halving events and emotional investors all mixed together. That's a lot already.
Yeah, my head's spinning a bit. But what else is in this Bitcoin recipe?
Let's not forget about the big institutions.
Oh yeah, like the big companies and banks, are they getting involved in Bitcoin too?
They sure are. Think about it. For years, Bitcoin was like the outsider, you know?
Right, like the rebel of finance.
Yeah, but then these big names like MicroStrategy and Tesla, they started adding Bitcoin to their balance sheets.
So they were like, hey, Bitcoin's cool now.
Yeah, basically. And suddenly Bitcoin had street cred. This flood of institutional investors brought a new level of legitimacy to Bitcoin.
It's like they were saying Bitcoin is a real player now.
Exactly, and the numbers show it too. Back in 2021, a report found that 36% of institutional investors had already invested in digital assets, and Bitcoin was their top pick.
Wow, so it's not just the tech geeks anymore.
Nope, now it's the hedge funds, family offices, everyone's joining the party.
Okay, so we've got the emotional roller coaster, the big players joining the game. What else is there?
Well, don't forget about the rules of the game, the regulations.
Right, because Bitcoin's still kind of new, so the rules are probably still being figured out.
Think of it this way. Bitcoin's like a teenager, and the governments are the parents trying to set boundaries.
Yeah, like trying to keep things under control.
And this whole situation, it has a huge impact on the price.
Oh, really?
How so? Well, when governments make clear rules about cryptocurrencies, it makes investors feel more confident.
Makes sense.
Yeah.
Like they know what to expect.
Exactly. That leads to more stability in the price. But when things are unclear, it creates fear, and that can make the price go all over the place.
So clear rules good, unclear rules bad.
Pretty much. We've seen this play out in the real world. Take El Salvador, for example.
Oh yeah, I heard about that.
They went all in on Bitcoin, made it legal tender, and that gave the market a huge boost.
Wow, a whole country embracing Bitcoin. That's a big deal.
It was. But then you have countries like China, they cracked down hard on crypto ban mining and trading.
Oh wow, that must have hurt the price.
It did. It caused a big drop. So you see, it's a global game of tug of war with Bitcoin caught in the middle.
So investors need to keep their eyes peeled and their ears open.
Absolutely. Every time a government makes an announcement about crypto, expect a price swing.
Okay, so we've covered supply and demand, the emotional side of things, the big institutions, and the ever-changing world of regulations.
It's a lot to take in.
It is, but it's super fascinating too. But before we get lost in all this Bitcoin craziness, don't forget to check out those awesome offers in the links below.
Yeah, they might just help you understand this whole thing a little bit better.
Or we'll be back soon for part 2 of our Bitcoin deep dive. See you then.
See you then. Welcome back to the NOSR Webs podcast. We're diving deeper into the world of Bitcoin.
Yeah, round 2 of the deep dive. Last time we covered those 10 key factors influencing Bitcoin price.
Right, from the basics like supply and demand to market sentiment and all that.
Yeah, it was a lot to process. Hopefully everyone's still with us.
I hope so too. All right, so let's break down some of those factors in more detail.
Sounds good to me. Where do we start?
Let's go back to supply and demand.
Okay, the foundation of it all.
Exactly. It's like the stage where the Bitcoin price dances, you know?
Yeah, sometimes it's graceful, sometimes it's more like a mosh pit.
That's a good way to put it. So we know Bitcoin has a limited supply, 21 million coins.
Yeah, that digital gold rush vibe, that scarcity, that's a big part of why the price goes up.
Right, but it's not just about the total supply, it's also about the pace at which new Bitcoins come into the market.
Oh, okay, so like how quickly those new coins are created.
Exactly, and that's where mining comes in.
Ah, yes, mining those powerful computers solving complex math problems.
They're like the unsung heroes of the Bitcoin world.
Yeah, without them, no new Bitcoin.
Right, and for their hard work, they get rewarded with freshly minted Bitcoins.
So the more miners there are, the faster new Bitcoins enter the market.
Well, it's not that simple. Remember those halving events we talked about?
Yeah, those things that cut the mining reward in half every 4 years.
Right, they act like a brake pedal on the supply of new Bitcoin.
Okay, so they slow down the rate at which new coins are created.
Exactly, it's like a controlled release valve managing the flow of new Bitcoin into the system.
Kind of like a digital central bank, but without the actual central bank.
That's a good analogy. Bitcoin's got this built-in mechanism for controlling inflation.
Yeah, which is something traditional currencies often have trouble with.
It's one of the things that makes Bitcoin so unique. But let's not forget about demand.
Right. You need people who actually want to buy Bitcoin.
Exactly. And there's a lot of them, individual investors, institutions, even companies using it for transactions.
Yeah, it's amazing to see more businesses accepting Bitcoin these days.
It's a sign of growing demand and a vital part of Bitcoin's story.
Like the more people use it, the more valuable it becomes.
Right. It's that network effect in action.
Yeah.
But demand isn't always driven by practicality. Sometimes it's pure speculation.
The buy low, sell high crowd.
Exactly. Some investors are betting on Bitcoin's future potential. They think the price will keep going up.
But that's what creates those Bitcoin bubbles, right when speculation drives the price instead of actual value.
That's true. We've seen those cycles throughout Bitcoin's history.
So supply and demand, it's a lot more complicated than it seems at first glance.
It's this dance between miners having events, businesses adopting Bitcoin, and then you've got those speculative investors adding to the mix.
It's like a recipe with a lot of ingredients.
Exactly. And that's what makes the Bitcoin market so unpredictable, so exciting to watch unfold.
Okay, so we've revisited supply and demand. What else should we unpack?
Let's talk about market sentiment.
Right, the elephant in the room, or maybe the elephant in the blockchain?
Good one. It's a powerful force that can really move the market.
Yeah, we mentioned the fear and greed index before as a way to gauge how the market's feeling.
Right, it's like Bitcoin's mood ring, but there's more to it than that.
Oh yeah, like real world events and trends, those things influence sentiment too.
Absolutely. The fear and greed index just reflects the bigger picture, news headlines, social media, economic forecasts. All those things can sway the market.
It's like trying to predict the weather. One day it's sunny, the next it's stormy.
Exactly. And these changes in sentiment, they can make the price go up or down.
So positive news price goes up, negative news price goes down.
That's the gist of it. Positive news, like a big company adopting Bitcoin or a country making crypto-friendly laws that can create a buying frenzy.
Everyone's like, Bitcoin's the future, let's get in on this.
Right, but then the opposite can happen too. Negative news, like a security breach or a government crackdown, can trigger a sell-off.
Everyone panics and heads for the exits.
It's crazy how quickly things can change.
So how do you navigate this emotional roller coaster without losing your mind?
The key is to not get caught up in the hype.
Right. Don't let your emotions control your decisions.
Exactly. Step back, assess the situation, do your research, and make decisions based on your own risk tolerance.
So don't follow the herd. Think for yourself.
Exactly. Be an informed investor even when the market feels crazy.
Solid advice. So we've got the emotional side of things. What about the institutional side?
Institutional adoption. That's a game changer.
Yeah, we talked about those big players like MicroStrategy and Tesla adding Bitcoin to their portfolios.
Right. They made a statement. Those moves showed the world that Bitcoin is a serious asset.
Like Bitcoin finally got invited to the grown-ups table.
Exactly. And that brought a flood of new money into the market.
Which pushed the price up even more.
Of course. But it's not just about price appreciation. Institutional investment also brings stability.
So they're not just in it for the quick buck, they have a longer-term view.
Right. And that can help smooth out some of Bitcoin's volatility, make it a less risky investment.
Like the adults are here to calm things down a bit.
And that's good for the long-term health of the market.
Okay, so we've got the emotional investors, the institutional investors. What about the regulators?
Regulations, the wild card of the Bitcoin world.
Yeah, it's like playing a game where the rules keep changing.
Exactly. And that uncertainty can really shake things up. When governments make clear and positive regulations, it boosts confidence.
Like they're saying Bitcoin is welcome here.
Exactly. But when they crack down on crypto, it creates fear and uncertainty.
Which usually leads to a price drop.
Right. And the thing is, the regulatory landscape is still changing all the time.
Yeah, different countries are taking different approaches.
It's a complex situation both for investors and for the industry itself.
So it's like a global game of regulatory chess with Bitcoin caught in the middle.
That's a good way to put it. Investors need to stay informed about these changes.
Okay, so we've covered supply and demand, market sentiment, institutional adoption, and the ever-changing world of regulations.
We've been through a lot.
Yeah, but it's been fascinating. Don't forget to check out those offers linked below that can help you navigate the crypto world.
Right, they're a valuable resource.
Now let's talk about the technology behind Bitcoin.
Right, Bitcoin's not just a currency, it's a groundbreaking technology.
Yeah, it's a revolution in the making.
And advancements in that technology can have a big impact on its price.
Oh yeah, how so?
Well, improvements to its scalability, its security, its usability, all those things can make it more appealing.
So basically, the better Bitcoin gets, the more it's worth.
That's the idea. And there's a lot of innovation happening in the Bitcoin world.
Like what? Give me some examples.
Well, remember those layer 2 solutions we talked about, like the Lightning Network?
Yeah, they make transactions faster and cheaper.
Exactly. They address some of Bitcoin's limitations, but there's more than that.
Oh, really? Like what?
There's research going on behind the scenes on things like privacy and security.
So they're making Bitcoin even better all the time.
All right, it's constantly evolving.
Like a living, breathing technology.
Exactly, and those advancements, they can have a big impact on its price.
So it's like investing in the future of money itself.
It's exciting stuff. But remember, technological advancements are just one piece of the puzzle.
Okay.
What else is there?
Don't forget about the competition.
Oh yeah, all those other cryptocurrencies, the altcoins.
Right, Bitcoin might be the king, but it's not alone.
Yeah, it's like a digital gold rush with thousands of prospectors.
And some of those altcoins are offering some pretty cool stuff.
So does that hurt Bitcoin's price?
No.
It can go both ways. On one hand, it can divert investment away from Bitcoin.
Like the pie is being divided into smaller and smaller slices.
Right. But on the other hand, a healthy altcoin market can actually benefit Bitcoin.
Really? How so?
Well, a diverse cryptocurrency ecosystem validates the whole concept of crypto.
It shows the world that this is a legitimate industry.
Exactly. And that can benefit Bitcoin too.
So it's a mixed bag competition and collaboration.
It's a dynamic ecosystem and investors need to be aware of it. Bitcoin's dominance isn't guaranteed.
Yeah, it has to keep innovating to stay on top.
Exactly. But it does have some advantages. Its history, its brand recognition, its community.
It's a survivor.
That's for sure. But there's one more factor we haven't talked about yet.
Okay, I'm intrigued. What is it?
The power of the media?
The media, how does that play into Bitcoin's price?
Well, media coverage can shape public perception and influence market sentiment.
Yeah, we all know how powerful the media can be.
Positive coverage can attract new investors, drive up demand, and push the price higher.
Like, the media is hyping up Bitcoin, and that hype becomes reality.
That's one way it works, but the opposite can happen too. Negative coverage can trigger fear and uncertainty,
leading to sell-offs and price drops.
Exactly. The media has a lot of power to influence how people see Bitcoin.
And social media amplifies that power even more.
Right, news and opinions spread like wildfire on Twitter and Reddit.
It's like the whole world is watching, waiting for the next big Bitcoin headline.
So it's important to be a critical consumer of information. Don't just react to headlines.
Do your own research, think critically.
Exactly. Don't let the media dictate your investment decisions.
Okay, so we've covered a ton of ground here. Supply and demand, market sentiment, institutional adoption regulations, technological advancements, the competition from altcoins, and the influence of the media.
It's a lot to digest.
But it's all connected. It all contributes to the wild world of Bitcoin pricing.
Absolutely. But before we move on, there's one last thing we need to talk about.
Oh, really? What's that?
Market liquidity.
Market liquidity. Okay, I'm not familiar with that term. Break it down for me.
Imagine you're trying to buy or sell something rare. If there are only a few buyers and sellers, the price can swing wildly.
Okay, I get that. So liquidity is about how easily you can buy or sell something without affecting the price too much.
You got it. High liquidity means there are lots of buyers and sellers, so it's easier to trade without causing big price changes.
So there's a lot of trading activity, the price is more stable.
Exactly. Those big cryptocurrency exchanges like Binance and Coinbase, they handle huge trading volumes that contributes to Bitcoin's liquidity.
Like a big flowing river, it takes a lot to disrupt it.
Exactly. But when trading volume drops, that's when things can get volatile.
Like a small pond. Even a tiny pebble can make big waves.
Right. So we need to pay attention to trading volume to get a sense of how liquid the market is.
Okay, market liquidity, got it. Not as exciting as some of the other factors, but still important.
It's the glue that holds the market together. It keeps things running smoothly.
All right, so we've revisited supply and demand, explored market sentiment, analyzed institutional adoption, navigated regulations, uncovered technological advancements, acknowledged the competition from altcoins, recognized the influence of the media, and even delved into market liquidity.
We've covered a lot of ground.
We have. And before we wrap up, don't forget to check out those awesome offers in the links below.
Yeah, they're a great resource for anyone interested in learning more about Bitcoin.
All right, we'll be back soon for the final part of our Bitcoin deep dive, where we'll explore its price history and what the future might hold.
It's going to be an epic finale.
Stay tuned. All right, welcome back to the NOSR Webs podcast for the grand finale of our Bitcoin deep dive. I hope you're ready to travel through time with us as we explore Bitcoin's crazy price history.
Yeah, it's been a wild ride, hasn't it?
It really has. From those early days when Bitcoin was just a few cents to those epic bull runs and those gut-wrenching crashes, it's a financial thriller for sure.
Absolutely. Bitcoin's journey has been anything but predictable.
So what can we learn from all this ups and downs? Can studying the past help us figure out where Bitcoin's price is headed next?
Well, past performance isn't a guarantee of future results, but looking at those historical trends can give us some clues.
Okay, so let's fire up that Bitcoin time machine and take a trip down memory lane. First stop, the year 2011. Bitcoin's still pretty much unknown. The price is just a few pennies. Then, bam, it explodes, surging to over $30. What happened?
That was Bitcoin's first moment in the spotlight. You know, growing media coverage, stories of early adopters making a fortune, all that created a buzz.
The world was starting to see the potential of this new technology.
Exactly. But that initial boom was followed by a correction. By the end of the year, the price had crashed back down to around $2.
Ouch, a reality check for those early investors.
Yeah, a tough lesson, but Bitcoin didn't give up. It bounced back.
It has this built-in resilience.
Absolutely. And then in 2013, we saw another surge of interest, this time driven by more awareness and the first Bitcoin exchanges.
So it became easier to buy and sell.
Exactly, and that fueled the price rally. By the end of 2013, Bitcoin had hit a new all-time high, over $1,000.
Wow. But then another correction, right?
Yep, in 2014, the price plummeted below $200.
What caused that crash?
Well, a few things happened. There was the collapse of Mt. Gox, one of the biggest Bitcoin exchanges back then.
Oh, yeah. I remember hearing about that. A major security breach. They lost a lot of Bitcoin.
It was a big deal. It shook investor confidence. Plus, there were concerns about regulations and new cryptocurrencies were popping up.
Bitcoin was facing some challenges?
It was a time of testing, but Bitcoin survived. It adapted. It came back stronger.
And then 2017, the year of Bitcoin mania. The price went crazy from under $1,000 to almost $20,000 by December.
It was incredible. Everyone was talking about Bitcoin. It was everywhere in the news on social media.
It's like the world had caught Bitcoin fever.
It was a time of excitement, but also a time of speculation. A bubble was forming.
And we know what happens to bubbles, they burst.
Right, and in early 2018, that's exactly what happened. Bitcoin's price crashed.
Another boom and bust cycle.
But even though the price dropped, Bitcoin didn't go away. The community kept working, kept innovating.
The true believers never lost faith.
And then in late 2020, Bitcoin started to surge again, this time driven by the pandemic and the economic uncertainty.
People were looking for alternative assets, a safe haven.
Exactly, and Bitcoin fit the bill. This time, the bull run was supported by more than just hype.
Yeah, we saw more institutional adoption companies adding Bitcoin to their balance sheets.
The media narrative changed too, and even mainstream financial institutions started getting involved.
It was a more mature market.
And in November 2021, Bitcoin reached its current all-time high, nearly $69,000.
But then another correction, right?
That's right. The market always corrects itself, and that brings us to today, early 2025. So what's next for Bitcoin? What does the future hold?
Yeah, that's the big question. What are your thoughts?
Well, it's impossible to predict the future with certainty, but we can look at the possibilities.
Okay, give us the good, the bad, and the unknown.
One possibility is that Bitcoin continues to mature and becomes a mainstream asset like digital gold.
The dream scenario.
It could happen if more people and institutions embrace Bitcoin and more businesses accept it as payment.
But there are risks too, right?
Absolutely. Regulatory uncertainty is still a big factor. Governments could help Bitcoin or they could hinder it.
It all depends on what they decide to do.
And then there's the competition from other cryptocurrencies, the altcoins.
They're still out there vying for the throne.
Bitcoin needs to keep innovating to stay ahead, but it has some advantages. Its history, its brand, its community.
It's a tough competitor.
That's for sure. So the future is uncertain, but one thing's for sure, Bitcoin has already changed the financial world, and its story is far from over.
It's been an amazing journey exploring the world of Bitcoin with all these factors that influence its price, from supply and demand to market sentiment to the power of technology and the media.
It's a complex and fascinating ecosystem.
It really is. And before we sign off, don't forget to check out those links below for exclusive offers and valuable resources that can help you on your Bitcoin journey.
They're a great way to learn more and stay up to date.
So what are your takeaways from this deep dive? What will you remember as you navigate the exciting world of cryptocurrencies? We'd love to hear your thoughts.
Thanks for joining us on this epic adventure into the world of Bitcoin. Until next time, happy investing.